Welcome back to Freedom Finance with Lanny, guys. Trying a different angle here for you guys today up here in the household office. And I have a fun topic for us to chat about here. Happy Father's Day, happy Parents' Day to everybody out there. Respect everything that you guys are all doing. But I wanted to get into a topic that'll maybe make you think a little bit about something. Have we gotten the best index that there is to invest in? I'm not talking about the ETF individually, such as your VOO or VTI, but you constantly hear about buy the S&P 500, buy the total stock market, set it and forget it. You can't outperform it, you can't beat it. Obviously, I've been preaching buying the S&P 500. I buy Vanguard's VOO every single day that you guys have seen here on this channel. You've probably heard a lot about the total stock market index ETF, VTI. But have we been lied to this whole time? A few things started triggering me over the weekend was, I took, in my MBA courses, a few investment courses, through my time period. And what if there's actually a different index that historically beats the total stock market and the S&P 500 over the last over 100 years or almost 100 years? Have we been lied to about buying the S&P 500, about buying the total stock market? So that's what we're going to touch on, guys. So grab your favorite beverage here on this Sunday, guys. Your coffee, your beer, your wine, your liquor. Come on, you're Italian this weekend, baby. And let's talk about the index that beats the S&P 500. Let's dive in. So in some of my investing courses, obviously, we bring up different topics. And I remember one finance teacher in my specific investment course when I was getting my MBA in finance pretty much gave us a few blueprint things to make as much money as we can. If there's anything that we could take away from it, it was actually kind of nice that he would say some of these things. One was always buy. I think it was in January. Invest as much as you can in January. The other one was buy as much as you can on Mondays, which I thought was hilarious. And then there's another one that he said that kind of resonated with me. And again, this guy was in the industry for probably 40 years, working through investments for at least, that long, but I know it was obviously a tenured professor as well. Plenty of research, obviously it comes with that. And again, fast forward, here we are, 2024, and probably for the last, 5 years, 10 years, 2 decades, it's all about the S&P 500. And, then the ETFs came out, buy the VOO or buy the VTI, set it, forget it. You'll be a millionaire. You'll be a millionaire just by investing into VOO every single week or every single month. Repeat it for as long as you can, and you'll have a few $1 million worth by the end of your destination, whatever time frame that is, whether it's 35, 45, 55, 65, 75, or 85. I've been buying the S&P 500 now for, about 2 straight years now, a little over 2 years now. VOO, I buy it every single day. Check those videos out if you haven't. But the professor, it came back this weekend because I was looking at our investments, looking at our portfolio and going, am I getting the most out of our dollars here? Am I doing a service or a disservice, for my wife and I and our family? And then that professor, one of his comments started really coming back. The tape really started coming back. And it came down to the small cap value index. And, I want to do a little bit more research. I was trying to do as much research over the last 2.5 days to, put this content together. I don't want to just put out content, just to put out content, hit record, hit end, upload. You guys know that. I could have a ton of videos if you want me to do that. Doing one video a week because I'm trying to find quality content from my experience, from my investing time period, my spending, et cetera, et cetera. So that piece of advice was small cap value. So stumbled on some research from Dimensional, a company. Since 1927, the small cap value index, this was published mid to early 2023, so around this time last year, the small cap value index since 1927 through that time period actually had outperformed the S&P 500 13.1% to 10.1%. So you're talking almost a few percentage points right there in outperforming the S&P 500. So then I started thinking, well, we've had a few wild times during that time period that was really just starting hitting. I guess we were in the middle of the high interest rate time period as well. But so how has small cap value done recently? When you think of small cap value stocks, these are newer companies, smaller companies, companies that obviously might rely on debt a little bit more. And this index has actually underperformed the S&P 500 the last 2 years, 2023 and 2024, I believe. In fact, I think the index is only about up maybe 1% this year, or down 1%. It's fluctuated between there, whereas the S&P 500 is up about 15% this year. And then I found out some more research that, these small companies rely on debt a little bit more to grow, to really, get them to the next level, right? Before maybe a larger equity offering, or from doing much more in revenue to where they don't need debt. They can use the cash flow from operations to help fuel future growth. So during high interest rate time periods, this index doesn't perform as well as something like the top 500 index, the S&P 500. Think Nvidia, Apple, Microsoft. How much debt do they need? Any comments? No, exactly. So when you think of those large players that make up a large portion of those indices, even the total stock market index, you're looking at companies that don't need to rely on that much debt to carry the index. Whereas these small cap value ETFs or indexes or indices, might have to rely on a little bit more debt, which a high interest rate hurts performance, hurts, overall stock price performance. But let's get back to current though. Obviously, over a long period, this isn't the first high interest rate time period that we've experienced, right? So do you kind of not consider, just the recent 18 months, but consider that almost 100 years since 1927 evidence to start thinking about the small cap value ETF? Vanguard has one, ticker symbol is VBR. So check that out. I think since its 2004 inception, it's performed an average of 8 to 9%. Obviously, you've only have 20 years in the last couple of years, so 10% of that time period, you've underperformed the S&P 500, right? And then when you actually get into the holdings, of this VBR, Vanguard small cap value, there's 858 stocks, so fairly diversified. So I just want you guys to know that. It's got $54 billion in assets under management in there. So it's not a small, ETF by any means. The largest composition in those portfolios focus on financials and industrials. And some of the larger companies, which represent under 1% of the ETF, is the Carlyle companies, and First Citizens Bank shares in there. You might have heard of Reliance Steel, ticker symbol RS. You've probably heard of Owens Corning, ticker symbol is OC. So, the names that you more than likely haven't heard of. They're saying the SEC yield, so the dividend yield you would get off this is also 2% with a 7 basis point expense ratio. So that is VBR, Vanguard's, small cap value ETF. But to bring it back into a conclusion here is, again, I got the Vanguard hat out here today for this video. Should we be considering the small cap value over a long term? And could that be something that could outperform the S&P 500 given the almost 100-year evidence? Have we been lied to? Not lied to, but have we been pushed and pushed and pushed to do the S&P 500? Not a bad investment, obviously, if you can average 10% per year returns for all of eternity. But could the small cap value, be the best index actually out there to maximize your value and wealth? Let me know what you guys think. I'll try to do another video about this, to do maybe year by year or decade by decade, as well as maybe which ones are the best small cap value ETFs out there. So let me know what you guys think. Are you guys already investing into small cap value ETFs or mutual funds? Let me know in the comments, guys. Subscribe to this channel, like this video if you haven't already, guys. Thanks for rocking with me, and I'll catch you on the next one.